What is the best way to view the stock market? How should one approach the stock market to make informed and confident investment decisions? Our chief financial planner, Mr. Ramlingam, will guide us through. Ramlingam, the screen is yours.
Without right perspective, when we start investing in stock market, then we may burn our fingers and complain that stock market is not for everyone. Stock market is a scam. There's a lot of insider trading and all. So let us understand how stock market should be viewed. What should be the right perspective? Peter Lynch, one of the legendary investor, has quoted this: stocks are not lottery tickets. There is a company behind every stock. Can a stock make someone super rich all of a sudden? Most of the times not possible. There is this news website called rediff.com. In the last 6 months, the questions what we are getting is, I have 1 lakh. Can this be doubled in 1 year time frame? I have 1 lakh. I want this to be accumulated to 10 crores in 10 years time frame. So what I wanted to tell them is stock market is not a lottery ticket. There is a company behind every stock. That means stock price can actually go up or down based on the earnings of the company. The company is growing at 15% rate, then we can expect 15 percentage return in the shares. The company is going up only by 15 percentage, but stock market is going up by 40 percentage. That means either in the previous years stock market didn't give returns, it is giving you the pending returns, or it is actually overpriced now, stock market may correct. That is the logic. In the last 1 year, if you look at, stock market has given close to 30 percentage kind of returns. I'm talking about Sensex. Sensex itself has gone up by 30 percentage plus. Because it has given 30 percentage return in the last 1 year, can I simply extrapolate and say every year it will give me 30 percentage return? Not possible, right? The companies behind the index, they should appreciate, they should earn more than 30 percentage every year, which is practically not possible. That is why they say, instead of looking at simply stock market returns, look at actually the company. The other way also it is true. When the companies are earning, like 12 to 15 percentage, market is giving you negative return. That means again it is a temporary situation for you. The price should be actually up, but it is down because of sentiments in the market. Continue to invest, you will be getting returns. If someone wants to really measure actual stock value of a company, they have to measure the company's performance. Instead of that, looking at 52-week high, 52-week low, technical charts, all are like you are measuring the height of a tree by simply measuring the shadow of a tree. Shadow of a tree at times, if you look at 12 noon, it will be like there will not be no height, having extra height. So if you want to measure a stock's value, you have to really look at the company's performance. If you want to evaluate a mutual fund, an index, then how corporate India is going to behave in the next 3 years, next 5 years, 7 years is what we have to look at. Corporate India definitely in a sweet spot today. Next 5 to 10 years is going to be a good rally for Indian market. It doesn't mean that market will be going only up. Market can correct also anytime. But if you have long-term money like 5 to 7 years money, then definitely stock market can give you good return. In the last 10 years, between 2013 to 2023, Sensex itself has given 12% return, 12.5 percentage return. CAGR it has given 12.5 percentage return by Sensex itself is a very good return, inflation beating return. If someone is investing in a large cap fund, it should have given them close to 15%. If it's a mid cap fund, it should have given them 18 to 20 percentage kind of return. If it's a small cap fund, it should have given them 20 to 25 percentage annualized returns. There were a lot of ups and downs in between. Regardless of that, if they have stayed for 10 years, it has given such a return. So simply looking at your stocks last 1 year return, last 2 year return, we should not go ahead and invest. We have to actually see the overall outlook, fundamentals, and based on that, we have to invest actually. In this picture, if you look at the orange line is Sensex earnings, blue line is actually the Sensex price. So as long as in the long run earnings are going to go up, share price will go up. Temporarily, when they are not in line. See, if you look at in the year 2008, earnings were low, but the blue line price were higher. Subsequently, the market corrected. Similarly, corrections can happen in the market anytime. But in the long run, this is a 30 years picture. The 30 years stock market has gone up. So if you believe in corporate India story, then definitely Indian stock market can give you good return. And there's a lot of predictions saying India is going to be the third largest democratic, is going to be largest economy that is going to be there. So because of that, there's a lot of growth opportunities in India. India is basically a developing country, not a developed country. The developing country, the base is low, the growth can be higher. So anyone who has short-term money, better to avoid stock market. I have only 1 year, 2 year, 3 year money. Please avoid investing in stock market. If you have got kind of 5 to 7 years, 7 years is a very good time frame because 7 years is basically a market cycle. In that cycle, there will be a boom, there will be a recovery, there will be recession, there will be crash, market fall, there will be election. All the ups and downs will be there. Regardless of that, if someone could have stayed the course for entire 7 years time frame, it should have given them good return. But in the short term, definitely it is not for them. Short term market can correct, right? If you are comparing stock market to a sword, if a short term investor is catching the sword by its blade side, a long term investor is catching the sword by its handle side. When you are catching it by the handle side, it is actually a weapon for you. It will help you. If you are catching it on the other side, it will hurt you. So how you want to be, make use of stock market, you have to decide.
Thanks for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.